Hey guys, Andrew Winnett here with the Legacy Movement. Glad to have you here today. Today we're going to be talking about something that's very, very alarming, and you should be leery of this when you're looking at different insurance products. And the alarming statistic that I want to bring to you guys today is why only 1% of term policies are actually paid to the beneficiaries. Now this is going to be a short video because honestly, there's really only one answer. And the reason why, by and large, only 1% of term policies are actually paid out is because, drumroll please, it's because people cancel their policies. They cancel it too soon, right? They have a little bit more month than paycheck. What's the first thing to go? Right? Oh, we don't need that term policy. I'm never going to die, right? Famous last words. Guys, the reason why most people, unfortunately, their loved ones don't get the benefit of that term product, even if they were to pass away during that term period, 20, 30, 15 years, however many, is because they canceled it. They let it lapse. They let it get canceled. It once was a big deal to them, made a lot of sense. It was something that they knew that they needed for security. They wanted to sleep at night. They wanted to know that if ever anything were to happen, that the loved ones are taken care of. It's the final paycheck. It's basically allowing, my legacy to be passed on to them, and they're not going to have to live in absolute squalor, right? So that's why we do it, but we sometimes can forget why we do it. And so that's why most of these term products, although they're affordable, although they make a lot of sense at the time, 5, 10, 15 years down the road, you run into a financial roadblock, and what's the first thing that goes? Because you're not thinking rationally, you're not thinking logically, and you let it go, and it lapses and it's canceled. And that's why most term products do not pay out. But I believe that I have an answer for this. And I'm not the only one that shares this sentiment. This is something that statistically makes a lot of sense for a lot of people. And the persistency rate, persistency, which is a good word for you guys to know about. Persistency basically means how long an insurance policy stays on the books, right? So the persistency of term insurance, this is really, really important. Term insurance, check this out, with ROP. What does ROP mean? Return of premium. The persistency of term insurance with ROP is substantially higher, than non-ROP. Does that make sense? Okay, so the persistency of term insurance with return of premium is substantially higher than non-ROP term insurance. What does that mean? If you're getting your money back, you're going to keep it, right? That's the point. If you're getting your money back, I've already invested X amount. I've already invested 10 grand into this thing. I'm going to get it back. I just need to hold on to it, right? I need to, go sell the golf clubs, or I need to tighten up on the Verizon bill, right? Or whatever. The point is, the way that you get around being just another statistic where the 1% of the term products are actually being paid out to the loved ones, which is dismal, the way that you can avoid that and your family actually gets a benefit, in my opinion, is return of premium, because you're getting your money back. You're going to hold on to it. I own return of premium for this very reason. It could be a touch more expensive on the monthly, but you're getting all your money back, which is nice. So you get to bet on both sides of the financial coin, the risk coin, if you would. If you die, well, there's the insurance death benefit. But if you live, you get all your money back, every single penny. I did a video on the 3 different types of term insurance with pros and cons for each. I encourage you to watch The last one, which is return of premium term insurance, where I go in depth into pros and cons, and you can make a decision for yourself. But the point is I'm a huge fan of return of premium because you get all your money back. What other option is there where you're going to let something go when you've invested 10 grand? It's not going to happen. You're going to hold on to that. You're going to find a way to financially overcome during that tough spot. You're going to keep the insurance that you know you need anyway, and then at the end, you're going to get every penny back, and you can blow it at the casino, or please don't do that. But you invest in real estate or do whatever you want. But that's why only 1% of term policies are paid out to beneficiaries, is because they cancel before the benefit has a chance of being paid. Okay? Hope you enjoyed this video. I'm Andrew Winnett with the Legacy Movement. We will see you on the next video.